Well, hello folks, I'm L.A. Little, founder of Neoclassical Technical Analysis, and I want to welcome you to this show where we're doing reviews of stocks that mentors have chosen. We do this once a week usually. We try to post it. It's a kind of a live setting, so a little bit raw, but it's from our mentors who have mastered the model, the Neoclassical model, and what we do is we look at these stocks that they have found through their searches and have decided are probably the best trades they want to pursue, and we look at them and we decide if they are or not and how we would go about it. So that's what this show is. Enjoy the show, and I'll see you on the next one. So if we kind of look at the big picture, right, this is S&P 500. Last week we kind of talked about this range. I think we talked about it, and it's more or less this part here. And you know, the thing, and I highlighted this in one of the morning missives, right, was that if you look at these things, right, you've got these big thrusts down that took place, and you actually had these up here as well that brought us into this lower range. And there's volume on all of those, right? That's where the volume expands. And a lot of times the volume does expand, you know, when you go down compared to when you go up. But the fact that these have been thrusting like they have, you know, with these big thrusts, there's just a lot of tension right on the tape, and that tension is a lot of it is as a result of a news flow that's taking place with Trump and with China. And so, you know, whether or not this can hold or not, we'll find out. But you know, the key thing to understand here is that, you know, if you take that little area about right there, if in fact price does, you know, blow past this, right, you're probably going to get some juice. And the same thing even on the upside, right? If you could blow past that, you're probably going to run into this area and potentially all the way up to here. So the reason for that is all the stops, the longer you go, all the stops tend to build up, and people are making their bets when it gets down to here, for example, to buy it, or when it gets up here to short it. And so that's what ranges do. Stops build up, and then when you finally thrust through them, especially if they last a decent amount of time, then you get a faster move in the direction of the break. Of course, if you pull this back and you look at it on the weekly, it's like, okay, well, you know, it's been doing this for a little while. It's just not a big deal. And so it's only in the daily, and those kinds of thrusts would be a fast thrust and then a fast thrust back the other way probably. So you get reaction kind of stuff. The big thing is that if we start breaking down on a larger scale, and you know, that would take us, you know, I've said before that more than likely if you get this, and matter of fact, there's an ABCD structure here. If you do the ABCD structure and back up, and if you just eyeball it by taking and duplicating this one instead of taking the percentages, it's going to take you right down into this low. And so, you know, unless they break this thing higher, this thrust is probably going to come right down here, and that's where it's going to get bought. And so, you know, if one's sitting and trying to decide, okay, how do I play this thing, you know, you could short the thrust if it happens and be willing to turn around and flip around and buy it right here, or you just wait until it gets there and you buy it on a dip to that area with the idea that it's probably going to bounce, and it should, and so it's probably a decent chance that it will. Always hard to buy retraces. Yeah, there's two of them. Yeah, so there's a good point here. There's two of them here, and so, you know, again, it's this area, right? Now, if it blows through all of this, then it gets a lot more interesting, right? In other words, if you thrust down and you don't find buyers here, because you got a swing point low here and here, then you would take this bullish and you would turn it to bearish, right, in terms of the arrow. And then it's probably right here that you get the bounce. And so if you thrust through all that, you probably get the bounce off of the big high volume anchor bar that sits there. A lot of times it's the high of the low, right, if it keeps going. And so there's areas along here that you would expect it to bounce. And I don't track this, but if you envision it, I imagine the stochastic, when it comes down, the stochastic's going to expand, and you're going to see this thing banging along the bottom of the stochastic or even getting outside of it. And that's typically where you want to buy something, right, when you get stretched 3 standard deviations on the way down. So again, even if it thrusts down, if that happens, and right now I'm kind of leaning towards that idea that that's probably what will happen. They're going to be buys. You know, the first spot's there in this range. Next spot would be the big anchor bar here. The next would be the high or the low. And so if one wanted to trade into those things, those would be the spots. If you go the other way, right, it's going to get some juice to the top side, and it's going to go right back up to the highs probably. And not as much points there, right? You're only talking, 60 points up here. Here it could be a lot more. Right now it's about 60 to this low. If it goes much lower, actually it's farther than that. It's about 100 points to the low. If it goes farther than that, right, fast moves down are always faster and larger. So you'd like to see, from my perspective, you'd like to see this happen so that you could actually buy down here somewhere. If you go over to the monthly, right, a move like that would do one thing that's negative. It would change this bullish retest regen to be a failure. But as far as doing more damage, it doesn't really do it. It just gets down into this area and probably gets bought. So I don't really see, I don't see this whole thing is that damaging, if you will, if it comes down. And then you have to monitor it. You're also in that part of the season, right, where August, September, these are usually the scary months, and that's what's kind of going on right now. With August, you got the trade sanctions, not sanctions, but the trade tariffs. They're going to be upped on September 1st. I saw that whatever the organization is that applies those, they came out today and said that they're looking at the 15 versus the 10 that was originally announced by Trump. There was no talk of the October number, which was, he'd said that in October he was going to take, I think, things that were 25 and, originally make them 30. And then, of course, there's the December 1st, I think it is, where the remainder of stuff that's not being tariffed here, the extra 300 billion gets tariffed in December, December 1st. So, and all of this was in response to these things, right? The 15 here and here. These things were in response to the Chinese doing their tariffs, what is it, a week ago Friday when we had the big spill. And they haven't came out and done anything. And my guess is they're probably going to do something this weekend, which is going to make Monday pretty interesting. So, don't get too excited if this thing holds and looks like, if we go back to this. Don't get too excited if this thing gets up into here coming into the weekend, because you may just see this thing reverse on you on the weekend. So very hard to trade this. You have to take baby steps, right? You gotta trade smaller so that you can absorb larger moves without taking stops. And that's just where we're at. If you look at the others index, the NDX, the IXIC, they all look the same. The only one that looks different is the Russell. The Russell's much weaker. The Russell actually broke here on Friday. It did a continuation of the downtrend that was already there. I got a big bounce today, but I don't think it really means anything. If you go to the weekly on it, the Russell's right at the cusp of trying to break this down. Now the Russell, much weaker, right? This one, compare it to what you just saw elsewhere. The Russell's already broken the 2 swing points over here. Now it's trying to break the third one. It would be the one, and a lot of times the weaker index is the one that gets down below everything else. What we were just talking about a while ago in terms of where would the buys be on the other indexes, the Russell is going to probably, if we break elsewhere, the Russell is going to come down and touch this. And then if we get below that, right, then the Russell will touch this while we touch that on the other indexes. And so they still will be lockstep together, just different price points given that this is the weaker one. And a lot of the weakness here is banks and oil. They're kind of tied at the hip right now, and the small caps are the ones that are taking the brunt of it. Okay, so we got about 4 stocks here to look at in the context of more than likely this market still wants to try and trade lower. So I'll start with the one that's actually a short. And I'll start with the big picture, Tesla. Tesla set up back here when it broke a fairly decent move to the downside. It was this big bar right here. And when we look at it on the weekly, you'll see it. It came down to test the lows, right? And actually got into that low and tested it. If I bring that up a little bit so that it's actually there. Tested it. And if you look at the volumes on it, right, a lot more volume when you hit it. That says that more than likely you can come down and hit it again. The other thing it did is it got about 1/3 away into the big bar here. So if it does break here, the target becomes down here. So the 140, 141, 143, somewhere up in there is the numbers if it breaks. The break here would also break another swing point that's over here that still hasn't been broken as well. And so this would be a dynamic move, and you'd get a fast move down. And so from the short perspective on a long-term time frame, this thing is already bearish. Just did a retest, reach in, only got about 1/3 of the way into it, maybe half, and then starting to reach in on this time frame. Now let's walk back to the weekly chart. On the weekly chart, that break that we saw on the monthly was the same break that took place here. So you got a multiple swing point breakdown, multiple time frames. That led to that big thrust that we were just looking at, the 1 bar on the monthly. That was this move down, set those lows. This move down, lighter volume than this bar, gets back above it, leads to a huge run back up. The move from here to here is about 40%. You know, so, I mean, it's like when you're trading something like this, these are massive moves in terms of percentages. And the thing that's interesting about this is it got within $1 of the full retest regen on the move back up. And if you will, the break was here. This was the retest, gets the thrust, gets the move back up. Second test, should get a full retest, does. And then what does it do? Regenerates to the downside. And so it's right in this spot now where it's coming into 2 areas of support. The first is the top of this bar and the top of that one. So that little zone that you see in the green. So that's where it's at right now, and it's hanging there trying to break it. If it breaks it, it wants to go down here and test this one. And so that's where it's at in the big picture. And finally, if you come back over, put it on the daily, you keep getting retest regens. The latest one was this one. This was the retest regen here. Regenerates to the downside. The thrust down here didn't quite break. You did get a break now of this swing point low. Now the retest of it is taking place. The top of that one is about 222. So it could bounce up to here and still be normal. But at some point, this looks like it's going to go down and try to break the next one. And then if it does, right, you've got some volume here. You'll probably get a hesitation around 200. But more than likely, it's going to continue on to that lower 186 number or so that we saw. So that's Tesla. Tesla's setting up for a bigger move to the downside. Big gap here, earnings. They just blew away earnings on the downside. And I suspect something will come up in the next few days or a week or two, right? Will drive this thing lower. The other one is a bullish one that's kind of running contra to all the fear, right? It's people running into gold shares. If you look at this one again, let's go to the monthly first. The monthly had the big breakout, 2 swing points breaks, holds, and then just shoots up, right? And that's very common, you know, A lot of times this thrust won't give you much of an entry. You did get a little bit of retest of this one, nothing on that one yet. And now you get the volume expand as this thing just shoots to the top side. If you put it, so you're very bullish on this time frame. Now remember, this only goes back, because we do 60 bars to a time frame, it only goes back 5 years. If you go back, the tops was about 1900, which would be about 185, 190 on this. So there's still, probably a 35, 40 point move to go on this at least to get back to the highs. If we go back and look at it on the weekly time frame, you had an ABCD structure that just finished, and that was this one on the weekly. And if I take and double this, you'll see it's just about finished, I think. Getting very close. So that one, it's not that much farther to go, but the thrust up here, nice thrust up, volume's kind of trailing off now as it's kind of grinding on up. I suspect when it gets up into this area, it's going to try and turn and at least hesitate for a while and consolidate. It may not consolidate any more than we saw here. It may consolidate more, I don't know. But the idea is that you'll probably see some sort of consolidation and maybe even some pullback to it. And then finally, if we go to the daily actually has an ABCD structure as well. And this one is to there. And then if I just duplicate that one, it gets us a little higher than the one on the weekly. And so all those are in effect. And so far, I don't see anything changing this. So if you're not in gold, it's kind of a hard place to buy it because there's not much left. But certainly on the next retrace, you want to really think about it because it's set up pretty well. The next two are some strong stocks that mentors are looking at. This one, if I go to the weekly first, this is not a good bar, right? So you get a nice big thrust up. And if you just think about what the bars tell you, is the bulls, had already had this nice push. And then I don't know if it was earnings or what, but whatever it was, pushed it up again, gets it up to this high, but they close it on the low. So that says that everybody that bought above this price point is in a losing position trying to, buy the break higher. That's not a good thing. And usually what happens, and it's longer term, it's fine. But short term, usually what happens is this ends up coming back deeper. Now there is things that we can look at that says, okay, where could it come to? And the first is this bullish retest regen. Now, it already tested it once, so it should test to the bottom of that, which is into this bigger bar here, and then you've got this one over here. And they both kind of overlap into that area that I just highlighted, right? And here you've got the volume. And so if I take all of this off and just put this bar back up, you can see those found support right there. So I expect this is the area that they're going to try and find support again as this comes back. And if it does, right, then it sets up a nice larger ABCD structure, right, to try to take it higher. And so this is where you have to watch it. This is where you want to see if the buyers come in or not, because that's the place that you'd want to potentially try and latch onto it. If I go back to the daily, here's that big bar up. It faded into it on the daily here. So it faded into this and then tried to bounce today. But my guess is that it's still going to, come back in a little deeper and get back into those areas that we just talked about. And if I go to the monthly, you can see, and we're not quite done with the month. We've got about, 2 more bars left, it looks like. But on the monthly, you got about 2.06. Over here, you got 1.5. So it's going to fall short on the monthly on this big bar, which also, if it doesn't close over it, which also tells you that more than likely you're going to get a deeper retrace. And so that's the way that one sets up. It's a good chart. You just want to wait on that retrace. And going back to the daily time frame, you want to look, the weekly time frame. You want to look at this 104 area. About is it 102 or 104? Top up here is 103, so it's about 102 to 104. That's where I'd be looking at it, and see, you know, support come in or not. Did the buyer step up or not? If they do, you can step on it there. If they don't, then you got to be more careful because you're going to get a deeper retrace. Just remember, this is telling you that it's not going to just skyrocket more than likely, so you can be patient. And this one's actually set up the same way, the next one, ARMK. You can see the thrust up, closes it on the low, comes back, they go back up, they try to get up there, what does it do? They sell it right back down. It's going to come down, it's going to close this gap. This little gap's going to get closed between here and this high at least, and potentially all the way back down here. Let's go to the weekly and see what's there. So your swing point high here, the bullish retest regen is there, and that's into this bar and the big bar. So the key here is the same sort of thing. Do you get support as it closes the gap or not? Do they buy it or not? Given this bar, the big dark bar, right, the dark candle, you just have to give it, you have to be patient and see if it wants to come deeper, because the ideal spot is back here, not up here, right? There's a big difference in terms of percentages there. So I would be very hesitant to just pile into it here. If it looks like it's going to hold, you know, maybe you take a partial and then you give it a chance to come back deeper and take the rest of it there or something. But, you know, on a weekly time frame still looks good. It's something you probably want to be invested in. On the monthly time frame, could be a problem, and that is that the big anchor bar here, right? That anchor bar has a top that's fairly high up. The things that worry me here is I don't care about this bar unless I get into it. I get into it more than a third of the way, which is somewhere around here. If it does, then they try to seek the bottom, and so that would be detrimental. So this particular stock, if you take the entry and you figure out a place to get into it, you definitely want to have stops below it. This is not one you want to play around with if it starts to cave in on you. So if I had to rank them, the Alamo Group would be a stronger one than the ARMK. And of course, I like the gold and the Tesla as good trades. Both of those are very strong. Okay, that's what we got for today.